Welcome to another multi-timeframe analysis. In this video, we will be performing a full breakdown on a pair, both from a technical and in order flow perspective. And by the end of the video, you will know exactly what kind of swing trading opportunity we can be actually looking for on that specific pair to obviously capitalize on the next possible move that the pair can actually give us. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education analysis every day on all my platforms. So I really suggest you subscribe to the channel so you won't miss out on all this free education, and I will see you in the video. The pair that I want to speak about today is nzdjpy. Now, why do I want to speak specifically about nzdjpy? Because it is, first of all, very interesting from an educational standpoint for a full analysis. Second of all, because it's very near to provide to us next week a very good trading opportunity. So I definitely want to make a full breakdown for all of you. As usual, we will first speak about the directional aspect of the pair by checking the monthly, weekly, and daily time frame. And obviously, we will also check the COT data, which is the commitment of traders. So what the biggest banks and institutions are currently doing in the market. And if you're able to read these tables, as I will show you in the video, you're definitely having an edge over your competition in the market. So we will be first taking the directional aspect of the pair from monthly, weekly, and daily, and the COT data. And then we will also speak about what kind of opportunity we could possibly be looking for from a 4-hour perspective, which is the best time frame for entry when it comes to swing trading. So let's make our full analysis, starting from the monthly, going all the way down to the 4 hours. Now on the monthly, what we can see. Now from the monthly time frame, we can immediately see that the market is currently approaching a very strong trend line. In fact, from here, the market has tested multiple times this area. In fact, let me be precise. In fact, the market has first tested the area again here and rejected to the downside, respected the trend line again here, and the market is currently testing and rejecting this very strong monthly trend line to the downside, from which we can definitely expect the market to give us a move to the downside. So from the monthly, we have a quite bearish market. We go down on the weekly, and what do we see? Now, from a weekly perspective, there are 3 patterns that we can see at the moment. Number 1, the first pattern that we have is a triple top. We have the market that from here had found strong resistance at this area and created this move to the downside. The market tested and rejected again this area here. And then currently the market has just tested and already rejected this zone to the downside. So the first pattern that we see is a triple top. The second pattern that we see is a bearish W formation. In fact, we have down, up, and up. So we have a bearish W formation, after which you definitely expect the market to give you a move to the downside. And the third pattern that we have is still not confirmed. Why? Because this weekly candle here has still 2 days and 10 hours to go before it will actually officially close. However, if this will be the shape in which this weekly candle will close, we will have the third pattern. Because after a candle that has this shape, what do you expect? You expect the next candle to fill in the wick. This is a pattern that we have spoken about many times. If you have a red candle with a wick, which is the same size or even longer than the body, you actually expect the next candle to fill in this wick. And the reasoning behind this pattern and the reason for which it is so effective is that this wick on lower time frames, aka for example the daily time frame, will be an impulse and a correction pattern, after which you expect the continuation to the downside. So at the moment, everything is bearish on nzdjpy. On the monthly, we have the bearish monthly trend line, and on the weekly, we have 3 bearish patterns. Let's go down on the daily and see what we have. Now, from a daily perspective, we can see that the market also from a daily perspective has bearish structure. Why do we say this? Now, first of all, the last time that we spoke about nzdjpy was after the market had created this M formation. In fact, in that previous analysis, what did we say? We said from here, we definitely want to see the market give us this move to the upside. And in fact, that is exactly what the market did. And I will link this previous analysis in description so you can go and check it out for further reference and more free education. And if you capitalized on this move to the upside, then great job. But what is next for nzdjpy? Now, in all this move to the downside, there is one candle which is not related to the move, which is exactly this green candle here, which is a strong level of previous support, which is now turned resistance here, which is also a strong supply area for this market. And currently the market is retesting this area. So previous support turned resistance with an impulse correction, and you expect the next impulse to the downside, exactly as we said on the weekly. The wick of the candle that we see on the weekly is simply this retracement here. So also on the daily, we have previous support, turn resistance, and a bearish pattern. So up to now, everything is bearish. Let's go and see what we have from a COT perspective. So commitment of traders, what the biggest banks and institutions are currently doing in the market. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. Now let's start from the JPY. Now, what do we see from a JPY perspective? Now, on the JPY, we can see that with the last report, institutions added 1.6K long positions and closed 4.3K shorts, bringing their net positions from 23K to 29K, and obviously increasing the long exposure to 32% and decreasing the short exposure to 11.7%, with 46K longs and 17K shorts. So the JPY at the moment looks quite strong, which is good, because if we have a strong JPY, we can see the move to the downside that we would like to see already from a technical perspective, as we have just seen from the monthly, weekly, and daily. So from a JPY perspective, everything is fine. Now keep in mind that we do have a new report coming out today, so we have to see what we will have with the new report. But if we will see more longs and more longs getting added and more shorts getting closed, it would be great for our setup on nzdjpy. And if we go and see what we have from an NZD perspective, what we can see. Now, from an NZD perspective, we can see that institutions with the last reports have increased net positions from negative to positive, with a 6.9K net positions that we have from our last report, with 1.6K longs getting added and 1.1K shorts getting closed, with a 21K longs and 14K shorts. So this is not good for our setup to the downside on nzdjpy, because it means that institutions have been longing the NZD. However, it's very important to say that, as we already said also for a JPY, we have a new report coming out. So today actually we will have a new report coming out on the NZD. Now, if with the new report that will come out today, we will see institutions close longs and open shorts on the NZD, or even add more shorts than longs on the NZD. So if we will see a decrease in the net positions with the new report, it would be great for our setup to the downside on nzdjpy. So definitely looking forward to see a decrease in net positions with the new report that will come out today. Now, if this will be the case, so if we will see a decrease in the net positions of the NZD today, and we will see the market close from a weekly perspective with this candle here, then there is definitely a very good opportunity on nzdjpy. And how we will be approaching this opportunity with students. Now, as usual, monthly, weekly, and daily are the best time frames when it comes to the direction of the market. But the best time frame for entry is the 4 hours. So what we will be doing with students, we will be monitoring price action from a 4-hour perspective, waiting for the market to provide to us one of our valid entries. But the first thing that we have to wait for is for the market from a 4-hour perspective to shift from a bullish to a bearish market. Because at the moment, if everything will remain as it is right now on the 4 hours, the market can and should continue to the upside, because everything at the moment is bullish from a 4-hour perspective, and the market can easily and should continue to the upside. So obviously we cannot be looking for any shorts yet. However, this is something that could definitely change in the future during next week, trading week. So what we will be doing with students is monitoring price action from a 4-hour perspective inside of this area, waiting for the market to shift from a bullish to a bearish market, and as soon as the market will shift from a bullish to a bearish market and provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and completion of the impulse, correction and impulse pattern to the downside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find it linked in the description. You first learn all the rules of my rule-based strategies in the program, and then you trade them live with me. In fact, every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entry, stops, take profits, as well as having me answering every single question that you have every day, including the weekends. So I really suggest you go and check it out. The link is in the description, and I will see you in.